Coming up on Market to Market, Congress chastises USDA about failing to consult with them on their reorganization plan. The big get bigger in a coast-to-coast rail merger. Keeping tabs on the decision makers and connecting readers. And commodity market analysis with Matt Bennett next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, August 1st edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Upending the norm has been one of President Trump's hallmarks. He did it again as the August 1 trade deadline approached, announcing new levies on some countries and extending the timetable for deal-making with others. This was also a big week for filing and filling in data points from economic reports, and they may be revealing that uncertainty is weighing on some economic indicators. There were 73,000 jobs added to the economy this last month. This was also 1/3 below expectations. The unemployment rate rose 0.1% to 4.2%. This week, the Federal Reserve Board voted to leave the key interest rate alone. The PCE, the government's preferred measure of inflation, added 0.3% last month. GDP for the second quarter was higher by 3%, reversing last quarter's reduction. The Department of Agriculture was established in 1862 and set up headquarters in Washington, D.C. Over the years, USDA has grown in size, expanding its offices in the district and across the country. The Trump administration would like to reduce the footprint of USDA in Washington, and Congress called them to the Hill to defend their plans. Peter Tubbs reports.
Very clear that I support
this week, the Senate Agriculture Committee heard testimony about the Department of Agriculture's plan to reassign staff currently based in Washington, D.C. to 5 cities around the country. Senators questioned the USDA over the likelihood of current staff accepting transfers and whether the selection process has already been completed.
A relocation for a family is a big deal.
It is.
What do you think will happen?
Senator, I think actually a large number of them will choose to come. I think many of them will choose to come because, given cuts made by other federal agencies here in Washington, D.C., the job market isn't what it once was here. And I think that the exciting opportunity these new hubs provide for them to actually be able to own a home affordably and grow and expand their family with a lower cost of living, that's one of the primary reasons we chose each of these 5 hubs, will attract them to come.
As we look at the 5 sites, like from my part of the world, there's nothing within 600 miles of us, from Fargo, North Dakota, for example. And we're in the heart of ag country.
We couldn't put offices everywhere, and we learned some lessons from the ERS NIFA relocation in Term 1. One of the most important lessons that we learned was, instead of looking all over the map, literally, for where we should go if we're looking to relocate, the first thing we should do is see where we already are.
But there's a difference between you selecting 5 hubs on your own and saying, okay, we're at the start of the plan, but this is the plan, and we're going to talk about it, but this is the plan. That's different than if we work together and come up with a plan that people have had input, they've been fairly heard and fairly treated, and it may be different than 5 hubs, and it may be different than these locations, and it may be different in form and function, but it is something that ultimately this Congress has something to say about, both from an authorizing standpoint and certainly from an appropriation standpoint. So is this a process?
For Market to Market, I'm Peter Tubbs.
U.S. railroads have undergone extensive consolidation since deregulation 45 years ago. there were more than 30 major freight railroads in the early 1980s. Today, there are only 6. That number could be changing soon if regulators approve a deal between the country's first and 4th largest rail companies. David Miller has the story.
Rail giants Union Pacific and Norfolk Southern have agreed to a merger valued at $85 billion. If approved, the two companies would come together under the Union Pacific label, control over 50,000 miles of track in 43 states, and be the first transcontinental railroad in U.S. history under a single brand. Matthew Gustafson is a professor of finance at Penn State University.
Before they go through the operational challenges of, figuring out how to allocate their employees across the newly formed company, they're going to wait and see what the regulatory agencies say about things.
According to company data, Union Pacific moves 1.6 million carloads of grain annually, and Norfolk Southern transports 18,107 carloads of grain and grain mill products every year. Union Pacific CEO Jim Vena says they hope to eliminate $1 billion in costs annually, and no union members should lose their jobs. However, the workforce could shrink due to attrition. SMART-TD, the nation's largest rail union, opposes the merger over worry it will jeopardize progress Norfolk Southern has made in safety and labor relations since the 2023 derailment in East Palestine, Ohio. The Transport Workers Union echoed those concerns by saying the deal delivers, quote, billions to Wall Street while workers get shafted, unquote. The two companies hope to get approval for the deal from the Federal Surface Transportation Board by early 2027. For Market to Market, I'm David Miller.
The White House already cut allocated money for the Corporation for Public Broadcasting. This will have a financial impact on all public media stations, including the one where we originate this program. Part of the defense against those cuts was the impact on rural viewers and listeners. Private newspapers have already been folding as pressure to keep readers engaged and buying subscriptions has forced consolidation. Efficiencies are also part of this, but so is the loss of watchdogs focusing on local government, schools, and communities. However, the smaller the circulation size, the better the chance a community is willing to support and help keep the information flowing. Colleen Bradford-Krantz has more in our cover story.
The sun has barely risen when 4 women began their work in the back room of the Hillsboro Free Press in Hillsboro, Kansas. Within an hour, they are joined by middle and high school students who will deliver the papers, under the watchful eye of school employees, as part of a life skills class.
We were able to get one of the paper routes, and so we come and pick up the papers and fold them on Tuesday mornings and then deliver one of the paper routes, and it teaches them work ethic, and that's what our classroom is about.
None of this might have been possible if it weren't for Joey and Lindsay Young. The couple took over the Hillsboro Free Press and run 2 other South Central Kansas newspapers during a period when many might have looked at industry trends and fled.
It's just, I really liked it, and it was youth and ignorance. Like, it was just that, abundance of, 20-something-year-old attitude that, you're indestructible and that, older people don't know what they're doing. I think there are certain things that we did better. And then there were a lot of things that I needed to be humbled with and that I was, just flat out incorrect about.
It was 2012 when the Youngs bought their first newspaper, The Clarion, in Andale, Kansas.
Lindsay and I lived like paupers. We saved my copy desk salary for 6 to 8 months, something like that. We sold a car to get enough down payment and enough money to put in the bank, which was still not enough, to purchase the paper.
The Youngs, with their money and time invested in keeping local journalism alive, are part of a shrinking group. According to Northwestern University's Medill School of Journalism, the United States lost more than 1/3 of its newspapers over the past 20 years. The nation now has 208 counties without any local news source at all, areas Medill calls news deserts. If given a choice today, Joey Young wouldn't change the path that led him from his job at a daily newspaper to where the couple now operates their Kansas publishing ventures out of the Harvey County Now newspaper office in Newton. But he would change the conversation about local journalism.
All I hear is this really depressing statistic that everybody likes to throw out to claim that newspapers are dying, right? Never is there a follow-up to where hey, that town lost 50% of its population over the last 20 years. If you're losing Main Street businesses, do I think that there's a magical answer for sustaining journalism in your community? No, I don't. You have to figure out how your community's gonna survive. If your community's gonna survive, a newspaper will survive.
To make sure community members and business owners keep a bit of focus on their local newspapers, the Youngs and their employees have done everything from a Halloween-themed toy ghost treasure hunt in downtown businesses to hosting an annual concert in a local park to a Friday community happy hour in the Newton newspaper office.
We used to have a Democrat elected to State House, which represented Newton. He came for a beer Friday, and so did the local head of the Republican Party. And we were all just hanging out, having a beer. And I was like, well, this is great. This is America. This is the way things should be. We're all just kind of having civil conversation, being a part of the community, which I think is special.
He knows not everyone is interested in being engaged in their local community, but enough still see value in it.
A lot of these small towns, the people that live there, they grew up there and they know just about everybody. So when you have a local newspaper, you can connect to those people that you've known. You can see if someone is going, like the homecoming queen and king, who's in the games, as far as sports, what kind of local events are going on, like festivals.
But the financial struggles are real. When paper prices spiked during COVID, the company struggled to break even. Instead of suffering quietly, the Youngs were honest with their readers and put out a survey to see whether they wanted to rely strictly on the digital versions or pay a little more to continue the printed version.
9 out of 10 of our readers said they wanted a print paper and that they would pay more.
Nearly 90% of subscribers stuck with them when they went ahead and doubled the subscription fee. Throughout their dozen years as publishers, the Youngs have struggled with recruiting journalists, as some aren't sure about living in smaller communities. They are not alone with this challenge, as other rural news outlets also struggle with recruiting. As a former high school journalism teacher, Lindsay came up with a plan for non-journalists called Earn Your Press Pass.
This was just a way of saying, okay, well, here's, somebody who's lived in our community for 20 years. They've put kids through the school district. They work here. They know everybody. And let's just teach them how to write and do a good interview. And now they can be an asset for the newspaper.
Lindsay cringes to think of a future where more counties become news deserts. She says that ghost papers, where the product is still there but with no local reporters, are not much better.
We take a lot of pride in just making sure that local governments are doing the right thing, and having a person at the back of the room is amazing how much that holds people accountable to make sure they're doing the right thing. I feel like we're protecting our taxpayers too.
Ultimately, it's the upholding of the newsroom's traditional task of being the recorders of the first rough draft of history that matters to her.
I think for us as community papers, we are the only recorders of history. There isn't anybody else that's writing any of this stuff down or reporting on it. Being such an intimate part of a community and being a place where people trust you with their stories and with what's going on, I think it's such a gift, and it's humbling, and it's really fabulous to be part of. So I absolutely 100% am head over heels in love with the industry.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the market-to-market report.
No trade deals with agriculture as the headline agreement joined in the pressure mounting from ideal growing conditions on the market. For the week, the nearby wheat contract fell 22 cents and the September corn contract lost a dime. A lack of progress with China on a trade deal held back the soy complex. The soybean contract for September dropped 33 cents, while September meal added $3.10 per ton. December cotton contracted $1.87 per hundredweight. Over in the dairy parlor, September Class 3 milk futures declined 6 cents. The livestock market was mixed. October cattle found 53 cents. September feeders put on $1.73. And the October lean hog contract declined 55 cents. In the currency markets, U.S. dollar index improved 147 ticks. September crude oil expanded by $2.13 per barrel. COMEX gold gained $4.90 per ounce. And the Goldman Sachs Commodity Index was down by more than a point to settle at 547.05. Joining us now to help us in our discussion, analyst Matt Bennett. Hello, sir.
Hello, Paul.
You're not going to smile much today, I don't think.
We can smile some.
We can, and it's not going to start with wheat, though. This is going to be a common topic. Wheat needs what to rally? Is it a trade deal? First?
Oh, yeah, you would certainly need a trade deal. The tough thing with wheat, of course, you got big global supplies. You got big U.S. supplies, a lot bigger than a year ago, around 100 million bushels. And so, you've got harvest 80% along, which is pretty much average. But, whenever you've got harvest pressure like that, export sales are pretty good. But look around. What else is there? There's just not much right now. It's tough. Spring wheat isn't in fantastic shape, all right, 50% or so, good to excellent. But for the most part, it's good enough considering all things, because we know we're going to have a big wheat crop overall. And bottom line is there's just too much wheat sitting around.
It's also going to be a lot of corn. We'll get to the December contract in a minute. I want to start with September. We still have a lot of old crop, you would think, if you believe the anecdotes online. Is there?
Yeah, there's less than last year, okay, first of all. But there is still some corn around. So last week, we actually saw some processors in our area push basis a little bit and said, hey, if you deliver next week, they were actually pushing from 18 over to 35 over. That lasted a few hours. Because there's a lot of guys that said, yes, sir, I'll take that. And so, of course that makes sense to someone who's kind of been sitting around waiting. If you look at it, Paul, I mean, we were pushing up around $4 at the time on September corn, so $4.35 corn. Take that versus what you saw in the middle of fall last year when basis was fairly wide. A lot of guys were selling and gals were selling $3.50 across the scale. Now, I know you had to hold on to that for quite a while, but I think if it was in your possession, you can do that for 85 cents.
Well, let's discuss that thing that you're facing that's out there growing. We're going to start with a question here. Let's go out of Ohio. Neil has the question for you, Matt. Will it be until the combines start to roll that the too much rain thing will finally be acknowledged by the market? Or will it only be traded after the January report?
The thing is that we know from the thermal imaging, from NDVI, I mean, the crop looks fantastic, okay, as far as, what kind of organic matter or just leaf content. I mean, it's just beautiful, chlorophyll-filled corn, not dead at all. I mean, there's really not a lot of dry spots out there. The thing is, though, Paul, too much rain can cause issues. We know a lot of guys sprayed fungicide, but are they going to have to spray the second time? We've heard, especially in the state of Iowa, I mean, you've had areas 10 to 15 inches of rain over the last month. I mean, that's quite a bit of moisture to have to deal with. And so we've heard folks say, well, I can't spend $40 an acre on fungicide. I understand that. Corn at $4 on the board, it's pretty tough for you to say, hey, I'm going to spend 10, 12 bushels. But the bottom line is, Paul, if you get tar spot or you get southern rust, you could lose 50 or 60 bushels. So if you're in a well above APH situation, it would behoove you to protect that crop as good as possible. As far as the question goes, yes, there's areas that have had too much rain, but we've seen in the past, it's a rare occurrence that too much rain ends up hurting a crop so much that you end up driving the market higher. Can it happen this year? Absolutely. Crop's not in the bin yet. But it sure looks to me like the USDA at 181 might be a little bit low, at least versus this August number.
Okay, so if I don't buy the 186, 187 target, just say I buy 184, 185. What's that mean on carryout? What does that mean for my decision making at harvest and beyond?
Well, there's some moving parts. So at a 181, at a 166, which is what the current forecast is, you got to ask yourself, how much export business might we lose to the Brazilians? Probably lose a couple hundred there. So maybe you're starting out at like a 185 and then you tick that up. Let's say you go 3 bushel and now all of a sudden you're adding 250 million bushels. So you could be a little bit above 2 billion. That certainly feels like a pretty big number. But Paul, and the trade right now, in my opinion, is probably trading at 185 plus. It sure seems like it to me. And I would say a lot of people agree with that. But moving forward, Paul, I think you could shift the paradigm a little bit on corn. Corn fertilizer ratio is not good. It's the second worst we've ever seen, back to 08. If you look at what phosphate prices are, if you look at the farmer's liquidity position, I think that you're going to find this fall the application rates of dry fertilizer are going to be probably a multi-year low. That's my opinion. And I think some alarm bells could sound when some of these guys start talking about tonnages. And I got to think at some point the funds are going to say, okay, the law of diminishing returns has hit us. We're going to have to start lifting these. I don't think they lift yet, because commercial traders, they really haven't bought, they're on the commitment of trade. You don't see a whole lot of sales there. They haven't bought much off the farmer. I think the funds are going to stick around and see that farmer sell.
A lot applies to the soybean crop as well. Do we have as much still left to sell of old crop?
No, there's not a whole lot of beans.
So if you have it, do you hold it right now since we're where we're at price-wise?
Well, if that was our mentality 2 or 3 weeks ago, it sure didn't pay off. And I'm not making fun. This has been a tough year to market, Paul. Let's just be honest about it. And so if you've got old beans now, the problem is we're coming up on harvest. In the Delta, they're going to start picking corn here before too long. We're going to see some beans harvested as well. To me, holding on to old crop beans, you've got to hope for a regional issue where someone really needs some beans to crush quickly. If you don't get in that scenario, I'm afraid that holding on to them is going to be a tough game unless Mother Nature throws something at us. Now, these forecasts over the last several months, they kept forecasting dryness in the Western Corn Belt. The models were incorrect. The models right now are saying that August is going to be a little bit on the drier bias for Illinois and Iowa. If the heat comes back in and you get some dryness, maybe you get a pop in this bean market, but if you do, I think we ought to know what to do with it.
New crop side on the November contract again, still, I would think it sounds like the same scenario that you just talked about, Matt, for corn.
Yeah, I mean, the thing is that I can see holding on to corn is paying off for someone. I've got to think that when you get into a scenario that people are talking lower acreage, we don't know if Brazil's going to have a big crop this next year or not. And quite frankly, world supplies are shrinking whenever it comes to corn. World supplies are not shrinking when it comes to beans. So essentially, when you look at that world balance sheet, we're producing more than what we're consuming. And that's not necessarily something that I want to store. And so, in all honesty, I have a hard time storing beans in here. Now, if you do, to me, you've got to do so. Maybe if you can do so at home, but most guys don't like storing beans at home. It's just traditionally not something we do.
Let's move to livestock quickly because October live cattle, now they're all-time high. Then what happened?
Yeah, and then we just sold off a huge sell-off there on Thursday. Tried to gain back a little bit Friday, but it really wasn't anything to get too excited about. The thing is the cash trade is still incredible, high 240s. You've got to think that had something to do with maybe a little bit of this rebound on Friday, but I've got to think the funds are sitting here looking at how much money they've made being long the cattle market. Fundamentally, it looks fantastic still. People keep asking, when's the top going to be? The top is going to be before anyone thinks. I don't know when it is, Paul.
I've asked it probably 15 times.
The thing is that a person that has a lot of exposure just has to understand that a day like Thursday could be followed up, since feeders went down the limit, by a $12 lower move on Friday. It could have happened. It didn't happen, thank God. But that type of a move is going to be what happens when the funds say, hey, you know what, we're tired of this long, we're going to move out of it.
Hogs have had a rally, then we are now back down to about that 100-day moving average. What's that mean?
I mean, all honesty, demand's been good, exports have been fairly good. The thing with hogs, though, is they've kind of followed cattle along. And I don't think hogs would be near where they're at if you weren't seeing these really big cattle prices, all-time highs, 3 out of 4 days at one point this week. I wouldn't want to be real long hogs, especially if you see a cattle sell-off.
It is interesting times. There's no doubt about that one, Matt.
Yeah.
So we have more. I do have a question about poultry tied to livestock that I'll ask you in Market Plus, okay?
Yep, absolutely.
That's your warning.
Okay.
Thanks, Matt.
All
Matt
right.
Bennett, everybody. And you have been watching the analysis segment. And in a moment, we will continue our discussion in our online-only segment. Search Market Plus with Matt Bennett wherever you get your podcast to hear that conversation. Or you can also go to our website at markettomarket.org. We've been on Facebook for years, and many of you have been loyal to us on that platform, so give us a follow if you're not there with us, or hop back into our conversations at facebook.com/market-to-market-show. That's the account, Market-to-Market-show. Next week, we are going to talk about that fight over busting the swamp to farm just a few more acres. Thank you so much for watching. Have a great week.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.